Hello everyone. So in this video I'm going to talk about the Graham's number. So the Graham number or the Benjamin Graham number, same thing. It is used for various reasons. So it is a number that we get after doing a few steps. Yeah, this is the formula for calculating the Graham's number. So why we need this is the main thing. So let's talk about the importance and then let's move to the calculation part and how to do analysis and how to understand furthermore. So okay, so for buying a stock, like we should know the value of this stock and things like that. So the Benjamin Graham's number is important as it will give us the Graham's number, which is also called or so-called the fair value or the value of the stock of any company that you do the analysis on. So yeah, this guy is a Benjamin Graham, and he's also the author of the book called The Intelligent Investor, which is really a famous book in the field of investing. So why it still matters. Okay, so yeah, to calculate Graham's number, we have to get two data of a company or of a stock, same thing. So EPS, which means earning per share, and book value per share, these two should be considered for calculating the Graham's number. And by using this formula we'll get the number. And here's an example as well, and it said that the number that we get after doing this calculation is like so-called the value of the company. Actually the book value of company is the real value of the company, but you know, the book value of the company or the value of the company is not always equal to the market value. So like, yeah, Graham's number is really important. Is it still relevant? You can see over here, price is what you pay, value is what you get. So finding the real value of the company or calculating the real value of company is really important, because price does not mean the value. In the real world, you know, like the market value is very high as compared to the real value of the company. So like I have said, this is the formula. So let's go dive into the calculation part. Oh, okay, so yeah, 15 times 1.5 it is 22.5 over here. Earning per share, EPS, and book value per share. This is how we calculate the Graham's number. So this is the data that I've copied in the Excel sheet. So you can see here the market price of this company that I'm not going to say the name of the company, but it is a commercial bank. The market price is 197.9, and you can see EPS is over here, which is 16.34 for the fiscal year. It's a Nepali dates. Okay, EPS is 16.34. Let's say that only. So let's not go to the year. Let's say it's of the Q3. Okay, fine. So the the EPS is 16.34 for the Q3. PE ratio means price divided by earning. So earning could be like net income. Price is like so what I did over here is like price divided by earning per share, or EP. Earning, let's say EPS. So it's per share. Price is also a per share price over here. Market price of 197. So yeah, let's see the calculation at first. So let's see how EPS is calculated. not EPS, like I mean PE is calculated. So price, the market price is 197 divided by the earning per share, which is 16.34. So it will give us a value here, because in here we have quarter 3 in the bracket, which is not the numerical term. So yeah, 12.11 is EPS, and you can see here the 12.11 is stated. So book value is under 37. So talking about book value, let's say how we get the book value. Say, let's say the par value, or the company issued the stock, or yeah, stocks. Let's say the company issued the stock at $100. Let's say that, and in year 1 company make like a decent amount of profit, let's say that, and goodwill as well, like yeah, things goes on and on like this. So company did a really good at its operation and made few amount of profit, you know, like this par value won't always remain 100. When the company has profit and company has a goodwill, then this par value or the book value will increase as well. You know, it could be like 200 in the year 2 or something like that. So book value is the real value of the company, which is under 13.65. But like the market value, you can see market value is always higher, not always, but market value is higher than the book value. So it is said that if any company has market value, this market value lower than the Graham's number, then it is considered like really a great company to invest in. So yeah, the book value could be 200 for the year 2, whereas the like market price could be like 300, something like that, you know. So what I really mean is yeah, that is what a book value is. So in market, the price of this stock is 197, at which the stock is being sold or being bought, and the book value is 137. So how to calculate the Graham's number? So you know the number, which is 22.5, or you can do 1.5 times 22. You can do 22.5 or 15 times 1.5. It's the same thing, because yeah, 15.9 1.5 is 22.5, and the earning per share, book value per share. So let's do that. So over here I'm gonna calculate EPS times book value. I'll write BP, or book value, BVV, sorry, okay, book value, okay, I'll write B, okay, BV only, and then I'm gonna do 22.5. So this is how I get this number button below here or over here. I'll calculate below here. Okay, so what I'm gonna do is I'm gonna take the EPS and I'm gonna multiply it by book value, which is over here book value, which is 137.65, 137.65, and I'm gonna multiply it by 22.5 and hit enter. So I get the value of 50,607.0225. So you can see the formula over here: EPS, book value, and 22.5. So over here I'm going to write square root of number this, and I'm going to hit enter. So you can see this is really important. I'm going to bold it. So you can see over here the Graham's number. This is called Graham number. the Graham number is 22.5, and you have to compare this to which is in general market price is always higher than Graham's number. So over here it's just opposite, like 224 is higher, so Graham's number is higher than the market price. So it means, what it means is that this is a good company to invest in fundamentally. I'm talking about fundamental. And yeah, I want to say that this video is only for educational purpose only. I'm not encouraging anyone to invest in any kind of stock or anything. Like, it's for education purpose only. So this is how you calculate the Graham's number. So Graham's number over here is 22.4, sorry, 224.96, let's say 225, and the market price is 197. So this means this is a good company to invest in. Like, you get the value of 224 at the price of 197. So yeah, that's what it means. Like, which was the website? Okay, this one. This is what the Warren Buffett is saying over here. Price is what you pay, value is what you get. So the value over here, actually the book value is this one, 137, which is below the market price, but you know, this Graham number is like considered as value, so I said so-called value. So the Graham's number over here, you can say it's 224.9600 or 00, you can say anything like that, 465. So it's almost like 25, I mean like 225. So 225 is above the market price. So the market price is below. This is the price that we have to pay, and this is the value that we get. So you can see we have to pay like below the value. The value is higher. This is a really good investment. Fundamentally, I'm talking about fundamentally. I'm talking about fundamental analysis. So this is one of the way to address the Graham's number and the market value. And you can say that even if the market is down, or even if there is like a bad thing going on the market, you can say the company can survive because it has EPS. The company is making profit, or the company is making profit from operation. Of course, you have to look at income statement and other as well. And you can see the company has lower PE. That means the PE ratio, like price is lower, which means that so how we calculate PE is market price divided by, I think I've already done this, EPS. So 22, yeah. So yeah, it means per $1 or per any currency, per one, we have to invest 12.11 in this company. So if I invest 12.11, then I will earn $1. That's what it means, or PE ratio, price per earning ratio, book value. So this is how we calculate Graham's number, and how we get the value, and how we compare with the market price. That is what we pay, and this is how we do fundamentally about Graham's number. So I think this is it for this video. Hope you guys are doing well. Goodbye.